Yes. So third problem B bit we completed, which is single entry system. Okay. So whereas in the single entry system, the particularly, and we have seen how to know the depreciation on furniture. So how it can be known? In two ways we can say the depreciation on furniture. So one is like a working note format. Working note format, what we have seen here, depreciation simply opening furniture plus purchases minus anything sold. That should be compared with the closing value. The difference can be called as a depreciation. Otherwise, you may have the furniture account. And by the way, you can say depreciation also. How, sir? Opening furniture 58,000. You bought again 18,000 furniture entry, furniture to bank 18,000. So book value 20,000, sold away at 16,000. 4,000 loss. Buy bank 16,000. Loss on asset entry, P&L to asset. P&L to furniture 4,000. Closing balance you can take it. Observe here, depreciation is a balancing figure. By any of these two ways you can find out the depreciation, by having a small working note, otherwise by opening a furniture account. Okay, this is what the single entry system. But of course, as I said, the paper is a bit lengthy, but all the topics, all the problems are very simple. Look at here, problem number 4. So here also A is given and related to death of a partner. Of course, B bit related to and final accounts, and both carries 10 marks each. Okay, so and A and of course as well as B, right? So first we will see here fourth one, bit A. We will see. So Donna, Jenny and Tony are partners. So in a DJT corporation, sharing profits and losses in the ratio of 3:2:1. On 31st March 2025. Their balance sheet is given like this. Look at the balance sheet: land and building, plant and machinery, furniture, fixtures. Joint life policy 60,000. What do you mean by joint life policy given in the balance sheet? Asset side 60,000. That 60,000 represents surrender value. And moreover, whenever JLP appeared in the balance sheet asset side, they are following asset method. Okay, so JLP surrender value 60,000 rupees. It is shown in the asset, like an asset in the balance sheet. They are following asset method. Okay, inventory, trade receivable, minus provision for doubtful debts, cash at bank. Capitals of so Donna and Jenny, Tony, general reserve, trade payable. So Tony died on 31st May. Books are closed on March 31st. April, May, after 2 months. During current year, 2 months later, death happened. As per partnership deed, the following arrangements were to be put into effect. What are the, on the occasion of death, these are the points given here. The remaining partners will share. Future profit sharing ratio of the remaining partners is 3:2. Look at here. The profit sharing ratio 3:2:1. The last person died. Remaining 2 would like to take 3:2 ratio, right? Next. The partners are allowed interest on capital at the rate of 10%, but no interest to be charged on drawings. Interest on capital allowed 10%, but no interest on drawings. Okay. Upon the death of a partner, the goodwill of the firm valued at 3 years purchase of the average profits of the, but of course here you have to calculate the firm goodwill. For that you are given last 4 years profits, and you have to go for average profits. Simply add by 4 years, divided by 4, average will come. But you are given profits before charging interest on capital, but to find out the goodwill, we need to know the profits after charging interest on capital, which means you have to charge interest on capital. Okay. Goodwill to be credited to the deceased partner's capital account with her share of goodwill without using the goodwill account, no doubt. So simply goodwill to the deceased partner credited, debited to remaining partners, continuing partners in gaining ratio. Okay. Next, profit till the date of death to be ascertained on the basis of average profits of the previous 4 years. Okay. And you are given last 4 years profits like this: 21, 22, 22, 23. But 23, 24 is a loss. 24, 25 again profit. Okay. Average capital during last 4 years. because you have to calculate interest on capital for the last 4 years, because goodwill to be calculated, profits to be taken after charging interest on capital. Then how do we know last 4 years capitals? For that you are given this particular information. The last 4 years average capital 3,50,000. On that you can calculate the interest. Upon the death of Tony, the capital is to be created with a share of profits, interest on capital till the date of death. For the 2 months, profit should be given. The person who is died, for 2 months, interest on capital also should be given. After the death of Tony, 2 lakhs was received from insurance company against joint life policy. Actually, 60,000 JLP looking like asset, but because of death 2 lakh rupees recovered. 60,000 asset recovered at 2 lakhs, then profit is 1,40,000. That 1,40,000 must be shared by all partners in profit sharing ratio. Okay? How revaluation done? Land and building at 3 lakh rupees, plant machinery depreciated by 15%, furniture fitting depreciated by 10%, inventory valued at 45,000. Okay? Trade receivable all considered good and no provision for bad debts required. Amount payable to executor of Tony, means executor, legal representative or executor, was paid immediately. Only 2 accounts required here. One is a revaluation account, another partners capital accounts required. Very important here, working notes in this particular sum. Okay? Now let us see how to do the revaluation account, right? First you check how the revaluations taken place. So revaluations taken place like this. Please check it one by one. What are the revaluations taken place? Land building given at 3 lakhs rupees. Land and building in your balance sheet 2 lakh 60. 2 lakh 60 in balance sheet. Revalued at 3 lakhs means 40,000 is a profit on revaluation, which you credit to revaluation account. Plant machinery depreciated by 15%. 1,15,000 plant machinery into 15%. 17,250. Furniture and fixture depreciated by 10%. Furniture fixtures 80,000 given. 10% means 8,000 rupees. Revaluation debit. Inventory valued at 45,000. Inventory given in your balance sheet 35,000. Revalued 45 means 10,000 gain. Credit to revaluation. Already provision for bad debt 4,500 was there, but now they decided need not to maintain provision for bad debts. If you want to create the new provision, debit. Already existing provision is, they are saying not necessary, so that you can cancel, you can credit it 4,500 rupees. Whatever the profit is there, that profit must be shared by all the partners in their profit sharing ratio. The profit sharing ratio given as 3:2:1. Share this profit to all of them in 3:2:1 ratio. And come back to the partners capital accounts. So in the partners capital accounts, first you can take their capital balances. Look at given 1,60,000, 1,88,000 and 1,20,000. That is what you can take here. By balance brought down. Any reserve and surplus you have to share to partners in profit sharing ratio. There is a general reserve 1,44,000. Distribute general reserve to all partners in their profit sharing ratio 1,44,000 into 3:2:1. Okay. Next is JLP. As I said that JLP in balance sheet it is looking 60,000, but it is realized on the death 2 lakh rupees. It is very clear 1,40,000 is a profit on JLP. That JLP will be distributed to all partners. Entry JLP to all partners capital account. In the all partners capital by JLP, 1,40,000 distributed to all of them in their profit sharing ratio. And it is clearly mentioned the person who died here, this during current period, 2 months later, May 31st he is died, April, May he is alive. For 2 months he is given interest on capital. How it is given, sir? Look at the Tony capital 1,20,000 rupees. So 1,20,000 into 10%, that is 12,000. Yearly 12,000, but only 2 months you should give, 2 by 12, that is 2,000. So therefore interest on capital given to Tony who is died 2,000 rupees, monthly 1,000 or 2 months 2,000. And revaluation profit already we calculated, that can be shared to all partners. And finally 2 things you need to work out. One is a goodwill, another is a share of profit for 2 months and the person who is died. Okay. For that, let us go to the working notes. Go to the working notes and calculate the goodwill. Profits given for past 4 years. Of course, for past 4 years, 1 year there is a loss. 3 years profits. Add year 1, year 2 and year 4 profit. Year 3 loss you can deduct. And by the way, 4,17,600 total amount. Divided by 4 years. Average profit will come. But this average profit can be known before charging interest on capital. But goodwill to be calculated after charging interest on capital. So therefore, let us calculate the interest on capital. It will reduce your profit. It is an appropriation. It is clearly mentioned last 4 years average capital employed is 3,50,000. On that 10% means 35,000. Therefore, 1,04,400 minus 35,000. Adjusted average profit 69,400. This is the average profit after charging interest on capital. So goodwill is 3 years purchase. Average profit 69,400 average profit into 3 years. 3-year average is the firm goodwill. Therefore, firm goodwill is equal to 2,08,200. The person who is retiring out of 3:2:1 and he is going out and these people are sharing in 3:2. Okay. So generally the person who is retired, his share is 1/6. Okay. 2,08,200 into 1/6 and his share can be credited to him 34,700. The same debited to continuing partners in gaining ratio. Sir, how gaining ratio will come, sir? New ratio minus old ratio. That is a gaining ratio. But here not necessary to calculate because a person is going out, how earlier they were sharing, even latest ratio also same. So therefore you need not to calculate old ratio of both. That will be new ratio also, gaining ratio also. New, gain and old in between both of them same. So therefore in 3:2 you can share to Donna and Jenny. So Donna's capital account debit, Jenny's capital account debit to Tony's capital account. This is entry how to record. Next, share of profit for 2 months. So how it can be given? This is also given based on the average profits of the last 4 years. Already we know average profits of the last 4 years is 1,04,400 rupees and write it. This is the average profit for which is for complete year and before charging interest on capital. Okay. So average profit before interest on capital 1,04,400. But we need 2 months only we should give here. So take the 2 months into 2/12. 2/12 means 17,400. 2 months profit. But this is before charging interest on capital. We can calculate the interest on capital and minus it. But here you should not take the capital, not average capital. This year you know already capital in your balance sheet. Please check it your balance sheet. Donna capital 1,60,000, Jenny capital 1,88,000, Tony capital 1,20,000. So total capital 4,68,000. This is the capital you have to take. 10% into 2 months, 2/12. The interest is 7,800. After charging 2 months profit and related 2 months interest, after charging interest on capital profit 9,600. On the 9,600 his share should be given 1/6. That is what 1,600. For that entry we know very well P&L suspense to deceased partner's capital account. Come back here, write the last 2 entries. So goodwill debited to Donna and Jenny 20,820, 13,880 and credited to the deceased partner 34,700 and also share of profit for 2 months. P&L suspense to deceased partner's capital account 1,600 rupees. The person who is died, he is settled, amount is settled to him. Remaining 2 partners balance carried on and simply brought down. Of course bank account also done here, but they required only revaluation partners capital accounts. Opening bank balance 56,500 rupees which you are given in your balance sheet. 2 lakhs JLP recovered, bank to JLP, this is bank to JLP. Okay, and Tony settled by 2,10,508. Final balance left is 25,992. This is what the death of a partner. Okay, right now let us go to the another one in the 4th one, B. We will go for fourth one, B, which is final accounts. Okay. So look at here, final accounts. First I will explain, and each and every item you have to record how in trading account, P&L account and balance sheet. So then very simple to explain. Look at here. The following is a balance sheet as on 31st March 2026 of Mr. Suresh, a retail trader. So first look at all debit items. I will tell you where each and every item to be recorded. Always you know that direct items in trading, indirect items into profit and loss account, right? Carriage inward. So carriage inward always direct expenditure, trading debit. Opening stock, trading debit. Carriage outward, P&L debit. Return inward means sales return, minus from sales. Purchases, trading account debit. Salaries, P&L debit. Rent, P&L debit. Interest on term loan, P&L debit. Printing stationery, P&L debit. Sales promotion expenses, P&L debit. General expenses, P&L debit. Discount allowed, P&L debit. Audit fees 15,000 up to 39/2025 means only paid for 6 months 15,000, which means remaining 6 months is outstanding. For 6 months 15,000 means for remaining 6 months it would be 15,000. Simply outstanding audit fees always added and current liability. Electricity charges, P&L debit. Delivery van, PPE, fixed asset of course. Furniture and fixtures, PPE. Computers, PPE. Cash at bank, current asset. Cash in hand, current asset. Drawings minus from capital. Insurance premium, P&L. Sundry debtor, current asset. Investment, of course, assets, you may write it. Come to the credit item. Interest received, P&L credit. Sales, trading credit. Return outward minus from purchases. Discount received, P&L credit. Capital, balance sheet at the top. Term loan from bank, liability. Sundry creditor, liability. Very simple. Now let us importantly will check the adjustments how these are given. First, value of closing stock 1,55,000. It should be credited to trading account and current asset also. A provision for doubtful debt is to be maintained 2% on sundry debtors. Provision for bad debt always minus from debtors and balance sheet. P&L debit minus from debtors in the balance sheet. Depreciation provided on furniture, fixtures, delivery van 15%. For furniture, fixtures and delivery van 15%, computers 40%. Always minus from the respective assets and also P&L debit. As I said that audit fees 15,000 is outstanding. Add to audit fees payment, paid already. P&L debit side and current liability also. Next, term loan from bank was obtained at the rate of 10% per annum. So you calculate very carefully this one. How much you have taken a term loan, please check it. 6 lakhs rupees term loan you have taken into 6 lakhs into and 10% per annum, 10 by 100, 10% per annum interest you have to pay, but you have taken on which date? May 1st. May 1st in the sense 11 months interest you have to calculate, 11 by 12. Okay, 0, 0, 0, 0. So 12, 5,000, 55,000. So interest 6 lakhs into 10% into 11 months means 11 by 12. 55,000 interest you have to pay. Please once you check trial balance debit side, how much interest on term loan you paid right now? 51,000 you paid. 51,000 paid, but annual interest is 55,000. 4,000 is outstanding interest. We can add and we can show like a current liability in the balance sheet. Last adjustment. A fire took place in the godown on 27th March 2026 and destroyed stock 40,000 rupees. The insurance company admitted claim 50%. The said loss on 31st March 2026. Whenever abnormal loss taken place, entire abnormal loss credit to trading account by matching concept. Means 40,000 loss credit to trading account, entire loss. 50% you can get from insurance company, another 50% we can't get it. Therefore 50% which you can't get charged to P&L account, 20,000. Another 20,000 which you can get from insurance company, show like a balance sheet current asset. The same we can implement here. Very, very simple. So see here, you can easily understand. Look at here first of all, in the books of Mr. Suresh, trading and profit and loss account. Okay. Look at here, trading account always opening stock debit we know very well. Purchases always debit we know very well. All these are the given items, just you are working here. That purchase return always minus, credit side sales you have to take, sale return minus, net sales in outer column, closing stock of course you write it, no doubt. But any direct expense you debit here, only one direct expense carriage inward you debit here. There is abnormal loss of stock 40,000, entire loss credited due to matching concept trading account credit side 40,000 rupees. Now there is a gross profit of 5,35,000. The same can be recorded in the P&L account credit side. P&L debit side all indirect expenses. Carriage inward indirect, salary no adjustment indirect, rent P&L debit. Already you have seen 55,000 interest on term loans you have to pay, but 51,000 only paid. 4,000 outstanding interest will be added. Moreover, it will be current liability in balance sheet also. Totally 55,000, right? Printing stationery indirect charge, sales promotion indirect expense, general expense indirect expense, discount allowed P&L debit, audit fees 15,000 inner column, 6 months only paid. Another 6 months, 15,000 outstanding added. Moreover, it is a current liability also. Electricity charge indirect P&L debit. Insurance premium P&L debit, that's all. But provision for bad debt, please check your debtors given in your trial balance. You are given debtors in trial balance 3,50,000. 3,50,000 into 2.5%. Okay, that is 8,750 provision for bad debt. Provision for bad debt always debtor minus P&L debit. You debited here P&L. In all the respective assets, the respective depreciation 15%, 15%, of course computers 40%. Depreciation to be calculated, total depreciation you can write here. And the loss on fire, out of 20,000 you can get from insurance company show like asset. Another 20,000 which you can't get from insurance company charged to P&L account. Okay. Ultimately net profit will come here 85,250. It will be added to your capital. Simply go to the balance sheet. Furniture already balance sheet given minus respect to depreciation. Delivery van given minus respect to depreciation. Computers given minus respect to depreciation. Take the debtors minus 8,750 provision for bad debt. Closing stock no doubt current asset. Investments 90,000 asset. Cash at bank 1,40,000 given asset. Cash in hand asset. Out of 40,000 you can claim, you can get the claim from insurance company 20,000, that can be shown like a current asset. Go to the liability side. Take the opening capital given you. Add net profit. Drawings if any minus you know. Write the net amount in outer column. Sundry creditors, term loan, outstanding interest on term loan. Already you know that 55,000 interest you have to pay. 51,000 only paid. Another 4,000 is outstanding interest. And audit fees also half of the amount 15,000 paid and another half of amount is a outstanding audit fees is a current liability. Okay, 15,000. And look at here how simple to work out this one. Very, very simple and very easy to handle this particular one. Okay. Come back to the problem number 5. See here problem number 5. But here you are given in the A. So 2 bits you are given A and B. Choice is given, internal choice. So one is a inventory related sum, another one is a BRS related sum. Any one you can do it in the exam to get 5 marks. But of course I will explain both of them here. First you let us 5th question A, attempt any one of these two. 1. P&L account of Prabhat showed a net profit of 15 lakh rupees. After considering the closing inventory 9,37,500 rupees. On 31st March 2026, on scrutiny, the books observed as followed. Okay, you are given a P&L balance, you are given profit. After considering stock 9,37,500 rupees. And some mistakes actually taken place. 1, 2, 3, 4, 5. You are required to ascertain the value of inventory and also you need to find out the correct net profit. Because of correction, doing correction of all the 1, 2, 3, 4, 5, your stock will be changed. And your profit also will be changed. We need to find out the correct profit and also we need to find out the correct inventory. Both we need to work out. Okay. Now let us see how to work out. Look at the one by one points. Just we are going to check here. First you are working here statement showing the adjusted net profit. The profit which is given already you are taking here. Any plus and minus you can do that because of corrections. Profit may be increased, you can add. Profit may be decreased less. then correct profit will come out. And meanwhile, statement showing the value of inventory, present inventory, you can take it because of doing corrections. Any increase in inventory, decrease in inventory, you can check it, find out the correct inventory. Okay. Now let us simply say one by one we will work out here. 5 points we need to check. So first I am going to take the net profit as given. 15 lakh net profit already given to you, that is what you can take here. 3 lakh, 9 lakh 37,500 inventory given, that's what you can take it. Now let us see each and every one. Point number 1. Purchases for the year included 37,500 paid for new electric fittings for godown. You bought a new asset, capital expenditure, but you wrote to revenue expenditure. Actually you have to write to electric fittings account debit, but accountant has written purchase account debit. So you bring the electric fittings asset into books, remove the purchase in your books. Whenever you remove the expenditure from your books, expenditure removing means profit will be increased, right? So therefore profit increased by 37,500. Purchases included electric fittings. By mistake you have to remove the purchase. When you remove the expenditure, profit will be increased, right? Go to the second one. Goods value 1 lakh were given as a free samples, but no entry was not recorded. No entry was not recorded here. What is the entry? Free samples to purchase. What happened? Purchase revenue expenditure decreased. Free sample revenue expenditure increased. One expenditure decreased, another expenditure increased. Expenditure decreased means profit increase. Expenditure increased means profit decrease. So 1 lakh profit increase, 1 lakh profit decrease. One revenue expenditure increase, one revenue expenditure. Which revenue expenditure decreased? Purchase decreased. Which revenue expenditure increased? And yes, advertisement or free samples, whatever you call. So 1 lakh minus 1 lakh add. Next, third one. Invoices for goods amounting to 6,25,000 had been entered on 27th March 2026, but the goods were not included in the stock. So we received 6,25,000 goods earlier. Invoice for goods were received and also purchase invoice recorded into the books, but the goods were not included in the stock. Whenever goods not included in the stock, so if you have to include that, whenever you include goods, automatically profit will be increased, no doubt. Your profit will be increased. Meanwhile, your stock also will be increased. Purchase invoice recorded, but that is not taken into your closing stock. If you take that, your profit will be increased and your stock also will be increased. Okay? And go to the next point. Point number 4. In March 2026, goods 5 lakh rupees sold and delivered also, but it is recorded in April month, actually done in March, but sales in March month omitted. You record it. Whenever, how do you write the sales entry? Customer to sales. Whenever you record customer to sales, revenue increase. Revenue increase means profit increase by 5 lakh rupees. Increase of profit, add 5 lakh rupees. Last one. Goods costing 1,87,500 were sent on sale on approval basis, sale or return basis in March at a margin of 33.33% on cost, 1/3 profit, 1/3 on cost. The approval given in April, but these were recorded in the sales of March. You send March, you wrote like a sales entry in the month of March, but they approved in April. So by the end of the March, what we are supposed to do? Cancel the sales with sale price, generate the stock with cost price because they are with customer. First you cancel the sales, customer to sales, now sales to customer. Sale cancellation means profit reduced. Therefore 2,25,000 profit reduced. And one more entry, stock with customer. Whenever sale cancelled, you will be the owner for those goods. But those goods are with customer. Then you may write the entry stock with customer to trading account. But this entry should be written with cost price, not with sale price. Okay, therefore you do one thing. Already you know sale price given 1,87,500. On that profit you have to remove 1,87,000. Okay, and which is sale price. On that you have to minus the profit. It is given profit goods sent on approval basis. Sorry, 1,87,500 at cost price. And for that you have to add the profit to know the sale price. 1,87,000 into on cost 1/3. 1/3 you can add. That is 62,500. 1,87,500 cost price, profit 62,500, sale price 2,50,000. So, and then sales to be cancelled. Sale cancelled 2,50,000. And one more point I said, stock with customer to trading account. That is the entry. Whenever stock generated, profit will be increased. Stock also increased by the same amount. Therefore, your corrected profit 26 lakhs and your corrected closing stock 1 lakh 17 lakh 50,000. So, corrected net profit is 26 lakhs. Corrected inventory is 17 lakh 50,000. This is what the inventory and given for 5 marks. Okay, because simply each point carries 1 mark in the exam. Okay, go to the second one. Then you are going to work out a BRS for problem number 2 here. Choice either inventory or BRS. You can select one of these two. Okay. On 31st March 2026, the bank account of Sagar, according to the bank column of cash book, revealed a debit balance 37,25,000. On examination of the cash book, the following points they noticed: 1, 2, 3, 4, 5, 6, 7. You are required to make appropriate adjustments in cash book, and for remaining you can go for BRS. We know that amended cash book in the sense what? Whenever you do the amended cash book, any mistakes you have done in cash book, all you can correct it. Meanwhile, anything written by the banker, not written in our cash book, we can record here. Only then BRS can be prepared only for 2 things: checks deposited but not collected, checks issued but not presented, any mistakes by the banker in passbook. Only for these items you have to prepare a BRS. For remaining all, happily you can correct in your cash book. Okay, only 3 items you have to keep aside. What are the 3 items? Deposited but not collected, issued but not presented, mistakes by the banker in passbook. Except these 3, remaining all you can correct in your cash book. For those 3 items you can wait for BRS. Okay, look at here. Then I am going to prepare a adjusted cash book. Already given debit balance given 37,25,000. Take it. 2 balance brought down 37,25,000. Okay, look at the point number 1. Checks amounting 3 lakhs which were issued to trade payable but it were not presented for. Issued but not presented means already you have written in cash book, but they are not written in the banker by the banker in passbook. You can't do anything. Then we should go for BRS only. Next, checks amounting 12,20,000 had been recorded in cash book, but they are paid into the bank. But out of which 9,75,000 only collected by the bank, remaining uncollected. You deposited but uncollected, not created in passbook. You can't do anything. Banker is supposed to do. We have to go for BRS, that one also. Next, a term deposit matured on 13th March 2026 and the proceeds amounting 2,82,500 were credited to bank but entered in the bank statement but not recorded in your. Something term deposit actually amount realized, it is created in your passbook. But if you debit in cash book, that's all over. 2 term deposit matured 2,82,500 because entered in passbook, even entered in cash book, you need not to go for BRS. Next, inspection fees 15,000 debited by the bank. Some inspection fees debited by bank. If you credit to passbook 15,000 rupees, I need not to go for BRS because in both books it is recorded. A payment of 33,000 to creditor had been wrongly entered in cash book as 30,000. While payment 33,000 to your creditor, you have written only 30,000. Another 3,000 write it again. By creditor 3,000 rupees. So need not to go for BRS. It is over. Next, a trade association subscription amounting 5,000 was paid directly from the bank as per mandate is yet to be accounted by Sagar. Some subscription paid by the banker, any payment by banker passbook credit side, but we did not write in your cash book. So later write it. By trade subscription 5,000. For this also need not to go for wait for BRS. Next, a bills payable 2,50,000 had been paid by the bank, but it was not entered into cash book. Any payment, passbook credit. So any payment you can cash book credit, passbook debit. A bills payable paid, already passbook debited. Cash book we can credit it. 2,50,000. Clear. Last one. A bill of exchange 1,40,000 had been discounted with a bank charge of 2,000. No entry recorded by the Sagar. In our books not recorded. We know entry. What is that entry? Bank account to debit, discounting charges account to debit, 2 bills receivable account. Okay. So bank account 2,000, bill value 1,40,000, discounting charge 2000, amount of collection 1,38,000. Therefore, in the bank account you write 2 bills receivable 1,38,000. Just go for balance carried on as well as balance brought down, finish. And with this balance 38,72,500 starting point, as a starting point, we will do the BRS. So what we can do in BRS, only 2 items not taken here. Let us consider both of those 2 items. And go to the working notes, have a cash book and also have a passbook. Take in cash book debit side, take in passbook credit side. So you are starting with cash book, then you have to travel towards passbook. Where passbook travels, you travel the same. Means passbook increased, increase your cash book also. If passbook decreased, we can decrease our cash book also. Look at the point number 1. 3 lakhs rupees issued but not presented for payment. Cash book credit side. Cash book credit side in this is 38,72,500 minus 3 lakhs. Cash book is looking lower. Passbook is looking higher. The passbook is looking higher. Therefore, you can increase your cash book also. Add here. So, the book which is not given you, if that book increasing mode, you can increase. If that book decreasing mode, you can decrease your book also. Because of checks issued but not presented, the passbook looking higher and you can increase your book also. Next. Checks amounting 12,20,000 had been recorded in the cash book, having been paid into bank, out of which 9,75,000 had only collected by the bank up to 31st March. Out of 12,20,000, 9,75,000 only collected, which means 2,45,000 deposited but not collected. So cash book debit side you write it, deposited but uncollected. Whenever you write in cash book debit side and passbook credit side, it is not there. Cash book looking higher, passbook looking lower. Okay, the book which is not given here, passbook, it is looking lower. Therefore, you have to minus it, 2,45,000. This is ultimate result of the balance according to passbook. Okay, but any one of these 2 you can work out in the exam. Not necessary both of them, only one of them. Next, go to the another one, and this is B bit. Okay, look at here. What is this one? Second one, B, summary of receipt and payment of urban health care. Here you are going to work out the receipt and payment account you are given, and some additional particulars are given. Only income and expenditure you have to prepare. Only income and expenditure, right? Very, very simple to work out. Look at here. So this is point B. Summary of receipt and payment account of urban healthcare society for the year ending 31st March 2026 is given you. First look at the receipt side. Opening cash at bank 24,000. If you prepare opening balance sheet, of course it will be opening balance sheet asset. Subscriptions 1,50,000 revenue receipt, income simply. Donations, if nothing mentioned, if it is normally revenue receipt, but here it is mentioned for revenue expenditure. To meet revenue expenditure only it is received, so revenue receipt. Interest on investment 9%, per annum 27,000. Interest on investment revenue income. But if you notice here, interest on investments given, if investment value also given, very good. Sir, if investment value not given, of course you are able to find out. How, sir? If actually investment value not necessary here, if necessary you may find, because you are not required here balance sheet. How investments value can be known, sir? 9% is 27,000. 100% how much? 100 by 9 into 27,000. It may come like 3 lakhs. Okay. So 9% is equal to 27,000. 100% how much? 100 by 9 into 27,000. So this is 3,000. Therefore 3 lakhs. Investment value 3 lakh rupees, which was in the beginning itself. But of course here not necessary, because opening balance sheet you are not working. Health checkup camp collection. Simply revenue receipt. Come to the payment side. Payment for medicine supply 90,000. Honorarium to doctor. Payment for medicine supply. That is a key point here which you have to handle with care. Honorarium to doctor revenue payment. Salary revenue payment. Miscellaneous expense revenue payment. Equipment purchased fixed asset. Health checkup camp expense. Your revenue payment. Otherwise, while taking health checkup receipt, you can minus it. Or you can show like that is separately income, this is separately expenditure. Subscription due, opening, closing. Subscription received in advance, closing and opening. stock of medicines, amount due for medicine, value of equipment, opening 63, closing 90, value of building 1,50,000, 1,44,000. Simply you are required to prepare income and expenditure account. Very simple to work out the income and expenditure account. We will work out one by one. But you focus mainly on the medicines. Why, sir? Generally payment of medicine supply 90,000 means what we think? We bought medicines and payment is done. Not like that. Whenever you are given due for medicine supply or creditor for medicine supply, that payment is related to payment to creditor, not to purchase. Okay. So please go to the working note, small working note required here. And by the way, very simple to handle this particular sum. First open creditor for medicines. This is what we can say, creditor for medicines. Okay, by this what we are able to know, sir? Purchase of medicine during the year. Look at the due for medicine in the opening, 27,000. Due for medicine in the closing, 39,000. Payment for medicine supply, that should be considered payment to creditor, not for purchases. How much you paid for medicine supply? 90,000 you paid. Any purchase made, purchase to creditor. This is what the medicine purchased during the year. By this account for creditor for medicine, we are able to know purchase of medicine. Once purchase of medicine known, take the opening stock of medicine 30,000, add purchase of medicine 1,02,000 minus closing stock of medicine. Opening stock plus purchase minus closing stock. Medicine consumed will come. It will go to the income and expenditure account. Actually in the NPO, this is a very important key adjustment. Every time they will give this. Okay, but of course here it is given medicines. Next time may be given cricket equipment. Next time may be given sports material. Next time may be given printing stationery. So like that. But anyhow, whenever payment given, don't think that that is payment for purchases. Payment to creditor. Open a simply creditor account or due account. Take the opening due, closing due, payment. Purchase can be known. For opening stock, purchase added, closing deducted, consumption can be known. Consumption always record in the income and expenditure account. Consumption you can record in the income and expenditure account. And opening stock, opening asset, closing stock, closing asset, opening creditor, opening liability, closing creditor, closing liability. Okay, medicine consumed you can charge it to the income and expenditure account. Okay, right. So now let us see how simple to work out. Only this is the working note, check it. There is no any other working notes apart from this particular. Right. Come to the one by one. First receipt side. Take the subscription. Current year outstanding subscription always add. Last year outstanding less. Current year outstanding add. Last year outstanding less. Current year advance received less. Last year advance received add. Then annual subscription will come. Very simple. I will tell you once again. Current year outstanding add. Last year outstanding less. Current year advance received less. Last year advance received add. Then actual converted into annual. Okay. Next, donation 45,000 revenue income. Interest on investment revenue income. Camp collection 35,000. Camp payment deducted here. Net of camp receipt shown. Otherwise, camp receipt income, camp payment expenditure you can show it. Okay. Over. Come to the payment side. I told you medicine consumed you have to take here. That is already you have seen in the working notes. 87,000 medicine consumed. Next, honorarium to doctors, revenue payment, salary 84,000, revenue payment, miscellaneous expense 3,000, revenue payment, equipment purchased 45,000. Okay, but you will see equipment opening 63, purchase 45 add, closing given 90. The difference is called depreciation on equipment. Okay, and depreciation on health checkup and okay. Next, come to the adjustment. Subscription okay, stock of medicine okay, due for medicine okay, equipment, value of building opening 1,50,000, closing 1,44,000, 60,000 is a depreciation, total 24,000. Automatically surplus will come 30,600. Check it. How simple. Number of problems are more, but to compute, so to complete each and every problem it takes less time because it is given in the simplest form. Not lengthy way. You know that already in ICA Metal we have seen in case of non-profit organizations, you have to prepare opening balance sheet, you have to prepare income and expenditure, you have to prepare closing balance sheet. All that is not necessary here. Only income and expenditure you have to work out, right? Okay, now let us go to the next one. Redemption of debentures. Okay, and this is another simple and very easy sum given you. Please look at just journal entries required here. The balance sheet of Star Limited, unlisted company other than AIFI Banking Company, NBFC and HFC. You know that in this particular mode, whatever the debentures you are having, on the 10% amount you should maintain DRR, debenture redemption reserve. 15% you have to maintain debenture redemption reserve investments. While redemption, those investments must be sold away and debentures can be redeemed, and at that time debenture redemption reserve will be transferred to general reserve account. Okay, look at here what is given here. Shareholder fund, share capital 3 lakh rupees, reserve and surplus 1 lakh, long term borrowing 70,000, trade payable 50,000, assets PPE 2 lakh 50,000, non-current investments DRR 10,500. Please observe here. Okay, actually here debentures given 70,000. 70,000 into 10%, 7,000 debenture redemption reserve you have to maintain, and 15%, 10,500 investments you have to maintain. That is the reason DRR investment 10,500. Current assets, inventory, trade receivable, cash equivalents, notes to accounts. Authorized share capital 60,000 equity shares of 10 rupees each, fully paid 6 lakhs. Issued and subscribed 30,000 equity shares 10 rupees each, fully paid 3 lakhs. Reserve and surplus. Statement of P&L and DRR, debenture redemption reserve 70,000 into 10%. So required DRR is there, required DRR investment also there. Okay. Debenture 70,000. PPE 2,50,000, freehold property, cash at bank, cash in hand. Okay. In annual general body, this is also completely asymmetrical, copy paste. Point number 1. To give existing shareholders the option to purchase 10 rupees shares, 15 rupees each at 15 rupees for every 5 shares. Company is offering existing shareholders for every 5 shares, 2 shares they are offering at 15 rupees. This option exercised by all the shareholders. Please look at how many shares are there right now. 30,000 shares are there. 30,000 shares are there. How company is offering these shares can be called as a right shares. Right shares. Company is offering how? 2 shares for every shares, 2 by 5. 2 by 5. This is 6,000. 6,000 into 2, 12,000 shares they are offering. 12,000 shares are offering, each 10 rupees but given at 15 rupees. Okay. So all these shares are exercised by them. Generally whenever you receive bank to share application we write, but I am writing here bank to equity shareholders because I am receiving money from my existing shareholders. So therefore I am going to write bank to equity shareholders 12,000 into 15. But equity shareholders account debit to 10 rupees will go to share capital, 5 rupees will go to premium. 12,000 into 10, 1,20,000. 12,000 into 5, 60,000 security premium. Later on, next, to issue 1 bonus share for every 6 shares. Company offering bonus shares also. Then 2 entries will come. Reserve surplus to divisible profits to bonus to shareholder, bonus to shareholders to equity share capital. Okay, look at here. Earlier 30,000 shares. This is 12,000 shares. Totally how many shares? 42,000 shares right now. Into how company offering for every 6 1 bonus share, 1 by 6. That is 7,000 bonus shares they are giving each 10 rupees. That is 70,000. How do you write the entry? Reserve surplus to bonus to shareholder or divisible profits to bonus to shareholder, bonus to shareholders to equity share capital. So while using, definitely we can use security premium, we can use, just now it is created 60,000. You more 10,000 more required, you can use your divisible profit 10,000. So security premium account debit, P&L account debit to bonus to shareholder, bonus to shareholders to equity share capital account. Right shares are completed, bonus shares are completed. Now happily you can redeem your debentures with 10% premium. Last one is they are planning to redeem the debentures at 10% premium and DRR investments also sold away. 70,000 debenture amount, 10% premium, totally 77,000. Transfer to debenture holder account. Payment to be done debenture holder to bank, of course. The extra payment what you have done, that should be debited to P&L. Redemption premium can be adjusted or charged to P&L account. P&L to premium on redemption of debentures. Simply, once debentures are redeemed, DRR will go to general ledger, DRR to general ledger. Investments are sold away. Bank to debenture redemption, reserve investment account. Payment and debenture holders to bank account. See that how simple this particular sum. And this is what given in the exam for 10 marks. Okay. And look at the last one. Problem number 6. 2 bits are given. First one A. This is also just like from ICA material you are given. And B is a theory bit. First one is for 15 marks. Next theory question for 5 marks. Sixth one, look at A. Orange Limited issued a prospectus inviting applications for 2,50,000 equity shares 10 rupees at a premium of 2 rupees. 2,50,000 equity shares invited by the company. Each share 10 rupees at 2 rupees premium. How the payment to be done? On application 2 rupees, allotment 4 rupees including premium means 2 plus 2, 4 rupees. 2 rupees application, 2 rupees allotment, but 2 rupees premium also there. 6 rupees at first and final call, only one call, first final call 6 rupees. Applications were received 7 lakhs on equity shares. 7 lakhs applications you received. Letter of regret were issued to the applicants 30,000 equity shares and shares allotted to the remaining. Out of 7 lakh, for 30,000 their money given. Regret, sorry, we cannot allot the shares to you. Still 6,70,000 shares are there. For remaining 6,70,000 shares, 2,50,000 how allotment is done? Clearly mentioned, look at that. Category A, Category B, Category C. For 70,000 who applied, 70,000 allotted. For 2 lakh shares applied and 1 lakh allotted, 2 lakh and 1 lakh. 2 lakh applied, 1 lakh given means 2:1. For every 2 application, 1 given. Okay, that is 2:1. Here no problem, completely given. Last one, 4 lakhs. But they applied 80,000. Number of shares allotted 80,000, applied 4 lakhs. 4 lakh by 80,000, 5:1. If you apply 5 shares, you are given 1 share. 1 share you are given. Okay. So, A category full allotment. B category 2:1, for every 2 1 given. C category for every 5 apply 1 given. 30,000 applications money rejected. Okay. Next what? Excess money received with application was adjusted towards allotment. Even still any excess amount is there, that is refunded. If you have excess money adjusted for allotment, even some still excess money, that is given back, refunded. Okay. The first and final call was made. The amount was duly received except from Mr. Mohan. So, application no problem, allotment no problem, only while call money, there is a problem. Mr. Mohan belonged to C category, means 5:1 category, 5:1 category. And 5,000 shares applied him, 5,000, 5:1, 5,000 applied means 1,000 only given him, very clear. His shares were forfeited, cancelled. These forfeited shares issued at 1 rupee discount, means you collected 9 rupees. You are required to pass the necessary journal entries with a narration for the above transactions including bank transactions in the books of Orange Limited. Journal entries only required here. And also he is asking required detailed working notes and with application allotment and refunded everything. The same kind of sum you can see in your ICA material. First we need to work out very importantly working notes. Very important working notes here. So in working notes you may check here category A, category B, category C. Category A you can check it. Number of shares applied 70,000. Number of shares allotted 70,000. Applied also 70. Allotted also 70. Amount received on application 70,000 into 2 rupees 1,40,000. Received. Required also same 70,000 into 2 rupees 1,40,000. There is no excess money to allotment. There is no excess money to refund. Therefore, so total number of shares 70,000, 4 rupees allotment. Allotment due 70,000 into 4, 2,80,000. Of course, totally collected, 2,80,000 collected. Okay. Go to the second category. Number of shares applied 2 lakhs. Allotment given only 1 lakh. Amount received 2 lakhs into 2 rupees 4 lakhs. Required only 1 lakh into 2 lakh rupees. So therefore excess application money 2 lakhs. Sir, what is excess application money? How it can be adjusted, sir? First you can check the allotment due. Allotted 1 lakh into 4 rupees. 4 lakhs rupees he is supposed to pay allotment due. But 2 lakhs excess money adjusted for allotment, another 2 lakhs only you can recover. 4 lakhs rupees allotment money is due, 1 lakh shares into 4 rupees. Here 2 lakh excess application money adjust for allotment, another 2 lakhs rupees you can collect it. Okay. Last category C. 4 lakh 30,000. Sir, 4 lakh only. You are taking 4 lakh 30. This 30 wherever you take no problem because it is refunded. Their money is refunded, that's all. Okay. The 30, wherever you can add or you can show it separately also, no problem. Category A, category B, category C, and later also you can show it separately, no problem. Okay, but anyhow their money refunded. So therefore 4 lakh 30,000 C category, and excess money refunded completely for them because they come to the refund category C, because in C we are refunding, and for these people completely refunding 30,000, but remaining excess money refunding, that's all. Take 4 lakh 30,000 to remaining. Actually allotment done 80,000. You received 4 lakh 30 into 2, 8 lakh 60,000. Actually 80,000 into 2, only 1 lakh 60,000 required. You can observe here 7 lakh rupees extra money. Extra money is 7 lakh rupees. Okay, that can be adjusted for allotment, even still refunded. Sir, first of all, how much I have to collect for allotment? 80,000 into 4 rupees, 3 lakh 20,000 is allotment money what I have to receive. That is adjusted. Out of 7 lakh 320 adjusted for allotment means 3 lakh 80,000 still excess, you can refund it. 3 lakh 80,000 is refunded for adjustment. Okay. Amount adjusted for allotment 3 lakh 20. Amount refunded 3 lakh 80,000. So allotment due 3 lakh 20,000, received is nil because completely application money adjusted towards allotment. Allotment due, you need not receive anything, completely adjustment done. Okay. Now very simple, let us go to the entry. First entry, bank to equity share application. How many applications you received? 7,000 into 2 rupees, 14 lakh rupees, 7,000 applications. And while application money transferring to share capital, how, sir? Only you are going to allotment 2 lakh 50,000 into 2 rupees. Okay, that is 5 lakhs application money will go to share capital. How much amount adjusted for allotment and refund? We will check it. Go to the allotment and refund. Okay, how much refund has taken place? So amount adjusted for allotment, you can see here. Amount adjusted for allotment 2 lakh plus 3 lakh 20. 2 lakh plus 3 lakh 20. 5 lakh 20 adjusted for allotment. 5 lakh 20,000 adjusted for allotment. Adjusted for allotment 5 lakh 20,000. How much refunded, sir? Please go to the refund column. Amount refunded column 3 lakh 80,000 refunded to bank. Completely everything given by table. Okay. 3 lakh 80,000 refunded. Go to the next one. Allotment due. Allotment due 2 lakh 50,000 shares into 2 rupees, 2 rupees, 4 rupees totally. 10 lakh is equity share capital. 2 lakh 50 into 2 rupees, 5 lakh share equity share allotment. Allotment with premium, we know entry. Equity share allotment account debit to equity share capital to security premium. So equity share allotment account debit simply 2 lakh 50,000 into 4 rupees. This is 2 lakh 50,000 into 2 rupees. This is 2 lakh 50,000 into 2 rupees. Allotment due. And followed by allotment collection. Bank to allotment. How much allotment collected here? Very clear. 4 lakh 80,000. Allotment collected 4 lakh 80,000. Therefore bank to allotment 4 lakh 80. Only how you prepare working notes only very important. 15 marks for this question. Okay. First and final call due. Equity share first and final call to equity share capital 2 lakh 50,000 into 6 rupees. 15 lakh rupees. But how much is collected? How much is calls in arrear? Subsequently they are forfeited also. Again go to the another working notes. Okay. Number of shares applied by Mohan, 5,000 shares he applied. 5,000 shares. For every 5, 1 share only allotted. Number of shares allotted only him 1000. Only 1000. Amount forfeited for Mohan shares. 1000 shares allotted, na? That 1000 shares, so know that forfeited means paid up share capital. He paid application 2 rupees, allotment 4 rupees of course, 2 rupees only towards share capital, not premium. So application money to allotment to 4 rupees paid up share capital. 1000 into 4 rupees, 4000 forfeited shares, forfeited gain. Calls in arrear, he failed 1000 into only call money. Excess application money adjusted with allotment, even excess is refunded already. So he failed at call money only. 1000 into 6 rupees, 6000 calls in arrears. Loss on reissue, 1000 shares 1 rupee discount, 1000 loss on reissue. Gain, reissue gain on forfeiture and subsequent reissue gain. For forfeiture gain is 4000. 1000 reissue loss, net gain 3000, which will go to capital reserve. 3000 rupees will go to capital reserve. Okay? Yeah, come back to the next entry. Out of 15 lakhs, 6000 is calls in arrear. Remaining all the amount collected. Whenever shares are forfeited, share capital debited with called up capital. 1000 shares into 10 rupees, completely called up. 1000 into 10, 10,000. 2 forfeited shares, paid up capital, 1000 into 4 rupees. So which is due but not received, which is calls in arrear. That should be cancelled. 1000 into 6 rupees, 6000. And these shares are reissued again at 9 rupees, 1 rupee loss. Entry bank account debit, forfeited shares account debit to share capital account. Net gain, we have seen that. So 3000 rupees, that is a gain and which can be transferred to capital reserve. Entry forfeited shares to capital reserve account 3000 rupees. Okay. So this is what the very simple to get 15 marks this particular issue of shares and forfeited reissue of shares. Okay. The last one is given simply theory question you are given and which is for 5 marks. What is the trial balance? Even if the trial balance agrees, some errors may remain. Do you agree? Explain. So trial balance, of course you know that journal ledger trial balance. Trial balance is the third step in accounting process. So you debit all debit items in trial balance, debit side you write. All credit items you write in trial balance. Of course trial balance tally means which is arithmetically accurate. What do you mean by arithmetically accurate, sir? For every debit corresponding credit posted. But if trial balance is not tallied, it is not a conclusive proof of everything is correct. Still there may be so many errors. Okay. But you can't say trial balance is tallied and everything is correct. Okay. Look at here what is given. Preparation of trial balance is the third phase in the accounting process. No doubt. Journal, ledger and trial balance. After posting the various ledger items, a statement separately prepared by taking debit balances and credit balances. Such a statement can be called as a trial balance. Trial balance contains various ledger balances on a particular date. So while preparation of financial statement, P&L balance sheet, definitely we can take the support of trial balance. If it tallies, it means it is arithmetically accurate. It does not mean that all the errors are corrected. Still there may be some undetected errors may be there. Therefore it is very important and we should be very careful while journalizing, while posting. Because even though trial balance tallied, you can't say everything is correct and still maybe some errors may be there. Even though trial balance tallied, there are some possibilities are there and so which they may not disturb trial balance, but there are errors. Example, transaction has not been entered in the journal. Journal entry totally not recorded. Say example, salary paid entry, salary to cash. Completely no entry recorded, no debit, no credit. Of course tallied. No debit, no credit, but there is a mistake. Second one, a wrong amount has been written in both columns of the journal. For example, salary paid entry, salary to cash, 1 lakh, I have to write. But I wrote the entry, salary to cash, 10,000, 10,000. Debit also 10,000, credit also 10,000. Then it is tallied. Definitely there is an error. Still, even though tallied. A wrong account has been mentioned in the journal. For example, salary paid to Mohan, entry, correct entry, salary to cash. But I wrote Mohan to cash, then tallied. Only salary replaced by Mohan. There is an error, but still trial balance will be tallied. An entry has not at all been posted in the ledger. completely entry omitted to ledger, salary to cash, salary not debited, cash not credited, no debit, no credit. It was both will not come to trial balance. Definitely trial balance will be tallied, but still there is a mistake. Lastly, entry is posted twice in the ledger. For example, salary paid, salary to cash. Posted once, by mistake you posted once again also, and even posted once again also, not twice, thrice or four times, any number of times. Total entry posted. Therefore, there is a mistake, no doubt, but trial balance will be tallied. That's all. This is what as a whole, the 100 marks paper we discussed, along with by considering every choice also we discussed here. Finally, we can check it. Even we haven't seen even a single bit out of ICA material. Completely total 100 marks paper given by ICA material. So that if you are really prepared well, ICA study material, I believe that you can answer all the 100 marks perfectly. But sometimes time may not be sufficient sometimes because questions are a bit lengthy and paper is a bit heavy. But if time permits, if time given you, I believe that you can handle the 100 marks paper comfortably. Okay? So, write all the best for all of you. Bye.